Alright, so one thing I really like to do during lunch, besides eat, is look at the overall market and the ranges and actually kind of do this thing called a measured move. Um, I'll actually look at, maybe the weekly progress of what action has taken place already, find like levels, and then it helps me sort of draw out where I should set my price targets for both entry and exit. I'll show you an example here. So, hope I can get this on camera easier. So what I drew here is basically like Fibonacci levels. I mean, to me they're just lines, but mathematically, I guess this tends to work out if you believe it. I'm like whatever about it. I just noticed that it does fill in, give you a sort of guideline for support and resistance. But when I'm talking about measured move here, is yesterday, so crude did do that pop drop thing I was talking about, and then towards the close it went to a high, and sort of filled that range too. So you have support resistance, and that area is what I call the measured move. The theme that happens is when you see like a pattern like a bull flag here, that measured move will actually have a symmetrical counterpart sometimes. Um, it seems like it's actually doing that here. So the target that I might actually be halfway to my target. We might actually get to the high 53s, maybe even past 40. The problem I see though is that there is that gap here, so that will have to return at sometimes, maybe because of expiration it might not be the best time to have that move. Um, but yeah, look at that, that whole area of confirmation here. So if this is truly bullish and we do get that movement, then it's actually a good sign and a very strong underlying theme. Um, so yeah, the other thing I'd like to look at maybe, I guess, is just the Nasdaq. It's lunchtime again. I honestly don't really pay attention to the indexes. I just let them do whatever they want. But one thing to note is that even though the Nasdaq has been channeling up, sometimes crude is used as a counter instrument to balance out the movement of the index. So when the index goes down, the crude might go up as a buffer. Like you saw this during the, I guess, the European close. I think Europe was going down as crude was going up. So it's sort of a balancing act there. Like people might be doing hedges based off of the index of crude or something, but I tend to see that pattern. I don't know why it is exactly, but I keep that in mind during those opens. Like you'd think that the index would follow crude and in parallel, but sometimes they do move in opposite directions. So yeah, the other thing that you could possibly do, I guess. So yeah, I've hit my target. I don't know, so it is. I just wanted 1,000. I'm waiting for extra. I think that is possible. Um, but yeah, the other thing I was talking about is basically Canadian dollars are a good indicator. Any commodity-based currency, like even the Australian dollar, those are actually pretty good indicators. You can also watch the American dollar. The correlation between crude and the dollar. I mean, I have to actually do the analysis, but I mean, you would think that lower the dollar, higher crude, etc., because of inflation. That's probably what it is, but yeah, sometimes it isn't the case. So I don't really follow correlations too much. I used to. I used to have all the charts there and try to see if I could get a correlation. It was a good read, but there's too much data, so I just focus on price action now. Anyways, yeah, it's launch about 38 minutes to the rig count. That gives you an idea of how many drilling rigs there are producing um, crude, which accounts for the inventory and all the whatever shipping that's going out of the ports for American oil. That's all that is. I have no idea about what the factors or the causes of that. I just know more rigs, more oil, more supply. Price will probably have an effect. That's all the reasoning is behind it. So